We now bring on board Aveek Mitra of Aveksat Financial Advisors. Aveek, thank you so much for joining us on the newsroom. A tax cut slab, it was already announced for corporates, and post that we did see quite a neat rally, in the markets come by. But of course now, in a bid to spur consumption, the government is looking at personal income tax slabs as well. Do you think that could be the next big trigger for the markets, for the FMCG space in general?
Good afternoon and Merry Christmas to you all. And I think this a lot of news before the budget will keep coming up, either tax cut or GST cut or similar things which can keep the market going. But I really don't know whether the tax cut will really help in boosting the market, because ultimately there are only 3-4% taxpayers in our country. And reducing that tax ultimately will boost consumption is a premise which is not, I think, based on a very solid argument, because that part of the consuming class is not suffering at this point of time. So I may sound a little unpopular, but I think the more important is to increase the consumption at the bottom of the pyramid and just a layer below the tax-paying class, rather than actually increasing the consumption of the tax-paying class.
You don't have a very big taxpayer base in India. But I suppose on a sentiment basis, it would definitely, aid the market. But, Aveek, is that what we're going to be watching out for next? Are we going to be seeing that pre-budget move in the markets, because of all this news flow that's coming in? Literally almost every day we're going to have some or the other Finman sources speaking to some or the other media channel about various budget proposals. And all of this is coming in at a very sketchy time when it looks like the divestment target's going to be missed because, the BPCL stake sale might not happen in this fiscal. It may be rolled over to the next one. So is that going to be the next trigger that you will be watching out for markets, all the proposals from the budget?
Yeah, I think it will be a little longish answer, because I will take the market and the economy and the budget as in three separate ways, because the market is actually correcting some valuation mismatches which has happened over last 18 years. Last 18 months, because I think the entire market cap is concentrated among the top 94% of the market cap is concentrated on the few stocks. So that kind of value buying may be emerging, or maybe expecting a kind of revival of the value in those kind of spaces. That is one part of the market which we are seeing, that some recovery of the mid and small cap area. On the economy side, I do not think that there is any kind of immediate revival, quick revival is possible even by actions of the government. So economy, we are projecting economy will grow at about 5-6% rate. Maybe inflation will go up a little bit going ahead, and that can increase the nominal rate a little further. And on the budget side, I think expecting too much out of the budget will be a little risky, because already the government's balance sheet is too stretched. So they are giving a lot of sops here and there. And remember that GST is not revenue neutral, as we know by now. So a lot of GST cut, I do not think it is expected. Lot of fiscal stimulus, I do not think it can be expected. Tax cut, I don't know whether it will work, but if government actually starts paying back all the dues which are actually pending with them for a long time, that itself will bring the liquidity. So the liquidity is the key things, and liquidity ultimately gets cleared over the passage of time. But if government takes some proactive step on increasing the liquidity of the market by releasing the pending payments, releasing the GST dues to the states, that will go a long way in bringing the confidence or a long-term recovery of the market. But at the same time, economy-wise, I do not think that some wonders can be possible either from the budget or from the government, because we are having too many problems and too many intractable problems tied to each other. And real estate and infrastructure sector is a sector where still we have problems. So from that basis, I'm not really hopeful of the quick economic recovery. Market recovery of the beaten down sector, yes, possible. And this only Nifty going up with 5-6 stocks is not something which is sustainable for a very long time. At the same time, just for a new year, something is drastically going to change. That's all I'm not going to believe. But yes, over a period of time, gradually, I do hope that this mismatch of valuations gets corrected.
Yeah, I mean, I understand the twin problem, right? On one side, growth is not exactly that strong, and then they don't have the fiscal ammo as well to sort of pump in money into the economy to get growth going. So we, in fact, even did have a report saying about how the government may let go of the fiscal deficit target, you know, that they do have just in order to spur growth. I suppose it boils down then to individual companies. You mentioned beaten down sectors may sort of post a bit of a recovery. So Aveek, which are these sectors? I mean, I think all eyes would be on the auto space, perhaps because of that double-digit decline that we've been seeing. So that would definitely come in the category of beaten down then.
Yeah, auto, more than auto, I think the auto ancillaries may be a sector which can be looked into. There are stocks which are there where with having a stretched balance sheet in some metal space, in some mining areas which can be looked into. There are again certain stocks which just there is on a bottom-up approach, you can see that the company has completed their expansion phase. The balance sheet has not stretched that much, or even if it is stretched, they have got enough capacity to service the debt. These kind of pockets, I think, can be relooked at this point of time, apart from just looking into some 5-6 stocks or 7-8 stocks which are actually selling at a obscene valuation. And I do not think that the kind of growth we can expect out of them can justify that kind of valuation. But these were actually a flight to safety kind of investments which has been made over the last 2 years. It may get reconnected because at all said and done, economy has got a self-correcting mechanism, liquidity and corporate profitability. These all actually have a self-correcting mechanism where promoters, companies, management find out ways to survive, because we have passed through this kind of crisis earlier also. Maybe this time it is a little severe, it is more prolonged. But our company have faith in Indian promoters and Indian businesses and their resilience and their ability to actually come back through the worst. I am actually focusing more on that than on expecting that government will do this or that, because whatever we have expected out of the government till now has actually fallen short of the expectations. Or maybe they are trying to do certain structural things which are taking much longer than they have anticipated in the beginning. So having said that, something magical is something we are not factoring in from the budget or anything in immediate future.
Fair enough, Aveek. I just want to get a perspective on something that's more near term, and that's the third quarter numbers. We know that the first half of fiscal 2020 was not that great, but what are you pinning your hopes on for in the second half of the fiscal 2020?
I think the Q3 result will be as bad, or maybe in some cases a little worse in some sectors, like maybe cements companies may little disappoint on their pricing front or their volume front because of various factors like delayed monsoon and things like that. But Q4 and Q1 2021, we hope that we will see a little bit of recovery, specifically in the areas of auto ancillaries, some of the selected auto stocks, and a little bit in the cement, a little bit in the retail sector also, because retail, almost every company has done pretty badly during this festive season. That can really get us a bit of breathing space, and these companies' valuations may be revalued by the market and give some better valuation on these. So these are the areas we are looking into. Apart from that, there are other all bottom-up approaches where we find that the companies are been able to cope up with these changes and challenges better than others.
Okay, on that note, Aveek, I'd like to thank you for joining us on this edition of the Newsroom, and of course, season's greetings from all of us here at ET Now.